Planning for the unexpected isn't something most of us enjoy doing, but the truth is, it's necessary. Here's something you might not know. There's already an insurance scheme in Singapore that gives your family a financial cushion if something happens to you. And the best part, you might already be covered without even realizing it. It's called the Dependants Protection Scheme, or DPS for short. On paper, it looks simple: affordable premiums, automatic enrollment, and coverage if life takes a bad turn. But here's the question: is DPS really enough, or should you look beyond it? In this video, I'll walk you through everything you need to know: what DPS is, who qualifies, what it covers, how much it costs, how to make nominations and claims, and whether you should keep it or opt out. Hi, I'm Fer from Dollar Bureau, a personal finance platform that talks about insurance, investments, and financial planning. Alright, let's start with the basics. What is the Dependents Protection Scheme and what does it cover? The DPS is a term life insurance plan. That means no savings portions, no bonuses, and no cash value. Its only purpose is to give your family money if you pass away, are diagnosed with a terminal illness, or suffer a total and permanent disability. If you're a Singaporean or PR between 21 and 65 years old, you are automatically covered the moment you make your first CPF contribution. Coverage is up to $70,000 until age 60 and then $55,000 between 60 and 65. After that, it ends. Now, $70,000 might not replace years of income, but it can pay for funeral expenses, medical bills, or simply give your family some breathing space when they need it most. Now that we know what DPS is and what it covers, let's look at whether you're even eligible in the first place. The eligibility rules are simple. You must be a Singaporean citizen or permanent resident, be between 25 and 65 years old, and have at least made one CPF contribution. No medical checkups are needed when you first join and no lengthy application process. That's why many people don't even realize they are already insured. So, you're eligible, but how much protection do you actually get under DPS? From ages 21 to 60, the maximum payout is $70,000. From 60 to 65, it drops slightly to $55,000. There's also minimum coverage of $5,000 if your CPF balance isn't enough to support the full sum assured. Here's the reality check. The guidelines for life insurance coverage is about 10 times your annual income. That gives your dependents enough time to financially recover after you've passed. So unless you earn about $583 a month, DPS on its own won't be enough. It's best to think of it as a starting point, not your complete solution. Of course, cost is always a big concern when it comes to insurance. So how much does DPS actually cost? This is where DPS shines. The premiums are extremely affordable. Pause the video to read. The premiums are deducted directly from your CPF ordinary account. If that's not enough, they'll deduct from your special account. And if both accounts don't have enough, you can top up in cash, check, or gyro within 60 days. If you don't, your coverage reduces or even lapse. A tip for you: always keep an eye on your CPF balances, especially as you age and premiums get higher. The last thing you want is your DPS lapsing without you knowing it. So, if something happens to you, who actually receives the payout? The good news is you get flexibility. With DPS, you can nominate anyone to receive the benefits. It doesn't have to be your spouse or children. It could be your parents, siblings, or even a close friend. If you don't nominate anyone, the payout goes to your estate or proper claimants like your spouse, parents, children, or siblings. That may or may not reflect your wishes, which is why making a nomination is so important. Okay, how do you make DPS nominations? Well, to make a nomination, you must at least be 18 years old. Here's how it works. Download the nomination form from Great Eastern's website. Fill in your nominee's details. Get 2 witnesses over the age of 21 years old to sign, and the witnesses cannot be the nominees or your spouse. And once you're done, email or send a hard copy form to Great Eastern. When nominating more than one person, make sure the percentages add up to exactly 100% and are accurate up to 2 decimal places. My advice is don't skip this step. Making a nomination ensures the payout goes where you want it to, instead of being delayed or disputed. Now, let's move on to something just as important: how claims are made under DPS. Step 1. Understand what qualifies. DPS only pays out for death, terminal illness, or TPD. But exclusions apply. For example, suicide or self-inflicted injury within the first policy year, criminal acts, pre-existing illnesses before the policy began, or war-related events. Step 2. Gather the documents. For death claims, death certificate, claimant's ID, proof of relationship, and extra documents if the death occurred overseas. For terminal illness or TPD, claim form, doctor's statement, and medical reports. Great Eastern will even reimburse the doctor's fee once the claim is approved. Step 3. Submit the claim. Claims can be made directly with Great Eastern. For death, ICA will also notify them if death is registered in Singapore. Once everything is approved, the payout is made in a lump sum. It goes to your nominees, or if you did not nominate, to your estate or proper claimants. Making a nomination makes the claim process smoother and faster for your loved ones. Okay, but DPS doesn't last forever. So let's talk about when coverage actually ends. Your coverage under DPS ends once you reach 65. A successful claim is made. You opt out, you stop paying premiums, and you lose Singapore citizenship or PR status. So DPS is really designed to cover you during your working years, not after retirement. If you're looking for more coverage or coverage past age 65, you'll need to get a private term life plan from an insurer. If you like, our financial advisors can help you find one that suits your needs best. Click on the link in the description below to reach out. Okay, a common question that we get is DPS compulsory? No, DPS is not compulsory. You can opt out anytime. But here's the thing, because the premiums are so low and deducted from CPF, which you can't touch for daily use anyway, many Singaporeans just decide to keep it. So, should you opt out from DPS? For most people, the answer is no. DPS is one of the cheapest forms of protection out there and is deducted from CPF, so you barely feel it. But the truth is, $70,000 isn't enough. If your combined insurance coverage from term plans, whole life plans, or retirement plans already gives you around 10 years of your annual income, then you might consider opting out. Otherwise, DPS works best as a base layer of protection. But if you do decide that you want to leave, here's how to opt out of DPS. You can opt out in two simple ways. Number 1, call Great Eastern directly. Or number 2, download the opt-out form on Great Eastern website, fill it up, and mail it back to them. Refunds also depend on timing. So if you're automatically enrolled and cancel within 2 months, you get a full refund. After that, it is prorated. If you apply directly, you get a 14-day free look period for a full refund. Just remember, if you rejoin later, then you'll need to go through health checks and approval isn't guaranteed. So if DPS isn't enough, what are your alternatives? The closest alternative is a term life insurance plan. Like DPS, it's pure protection, but you can choose how much higher coverage you want, such as $500,000, $1 million, or whatever your family actually needs. Premiums are higher than DPS though, but they are still cheaper compared to whole life insurance plans. I've done a full video on the differences between term and whole life plans. I'll link it in the description if you want to check it out. Alright, we've gone through all the key details of DPS. So the final question is it really worth keeping? For most Singaporeans, I would say yes, it's cheap, automatic, and provides a basic safety net. But don't mistake DPS for a complete solution. $70,000 will not go far if your family depends on your income. The smart move? Keep DPS as your foundation and then build on it with a term or whole life plan so your dependents have real security. If you are unsure whether DPS is enough for you, don't guess. Speak to a financial advisor who can guide you. I'll leave a link in the description if you'd like to connect with one of our trusted partners. And the best part is, it's free. If you found this video helpful, don't forget to like, share, and subscribe for more practical financial tips. Thanks for watching. I'll see you in the next video.